Hey guys, welcome back to the Capital Mindset Show. Today we're going to be looking back at Meta Platforms. Meta Platforms is a company within the portfolio. It is a company that reported earnings last week. You guys may remember this, and we'll come back to these slides in a second. First, let's take a look at the price action. With this price action, it is down over the past 5 days, 5.86%, but you guys probably remember when it was down about 8-ish% on one day. Of course, we're going to be talking about what the heck happened. To start off, we did see some expenditures actually rise. We saw, for example, operating expenses rise by about 22%. R&D expenses, according to management, according to Zuckerberg himself, are going to be kind of tapered off throughout the rest of the year. This, of course, calms the investor base because the investors are kind of concerned about Facebook's or Meta's investments into the metaverse. Or they think it's going to be a lost cause, so to speak, which it might well be, but there are other concerns that we'll get to in just a second. As far as pricing, we'll get to that at the end of the video in terms of if anything has changed. So one thing I want to highlight with the current earnings report is we are seeing cash and cash equivalents and marketable securities actually downtrend. So what this means is a lot of the liquid assets that Facebook or Meta Platforms has had on the balance sheet have actually been reduced in an effort to invest in various projects. Now, these projects are yet to be seen whether or not they're going to pan out, but they might well be. Okay, they might be good projects. They might be duds. We have no idea for now. Right now, we can look at the business for what it is and then kind of make these estimations up to you guys, okay? So with that being said, if you guys are curious about my older thoughts on Meta, you can check out this video here. It was posted, let's just see, on April 27th, 2022. So you can see it down there. All right, with that being said, let's actually move over to some of the other things with Meta that I want to talk about, and we'll get to the earnings presentation, which is actually where we'll start. Here we're going to show, of course, what management wants us to see. We see the breakdown here of the company. We can see how things have changed a little bit. You can see how cyclical it kind of is. You can see that Q4 is a better quarter than before. Let's put our thinking caps on and think, okay, well, why is that? Well, that's the holiday season. And so there's a bit more advertising spend. Now, there are some other details I'll show you from Bloomberg that actually shows projections for advertising spend on online platforms, specifically social media, and how that's projected. But we'll get to that. So let's stick to Facebook's charts here. And these visualizations are pretty good. So that's revenue by geography. And the previous one, again, was advertising revenue by user by geography. And we see, again, going back here, revenue by user by geography is still pretty much the same. US and Canada is going to be the most valuable market, followed by Europe, followed by Asia Pacific, and the rest of the world after that. So if we take a look at some other segment results, we see advertising and other. So what I want to highlight here is we are still looking at an advertising company at the very end of the day. There's no ifs, ands, or buts around it, advertising business. And if you've been watching the channel for quite some time now, you know that we've been saying we're going to go into a downturn ever since the end or tail end of 2021. It seemed that way. And so now that we're in it, it shouldn't be a surprise if we do see some pullback on some ad spend. That should be to be expected. But there are some bigger concerns that I actually want to get to beyond that. That's just on the surface, what's easy to spot. This other stuff is actually easy to spot too because it was announced by other companies, but it's a bit more pervasive and a bit more of a challenge. Again, we will get to that. I'm just teasing it too much. All right, so net income, we do see it come down a bit. Of course, this can be drawn down by various other expenses. One of them we can see, well, we'll get to that because I want to actually talk about that in due detail. Okay, so we go to some other things. We have family daily active people. So what I actually sometimes complain about Meta is their creative use of these metrics. Sometimes they don't have daily active users. Sometimes they have monthly active users. So you see we have family monthly active people. I'd focus more on the daily. The daily is going to be a bit more important to me. Families kind of starts getting interesting because I think you only need one of them. Now, family average revenue per person, we do see that it has been rising from the longer term perspective. Again, Q4 is going to be the higher yield moment. If we take a look at daily active users, we do see, again, still strong numbers here. And you remember, US and Canada is the most valuable segment in this category, followed by Europe, and then afterwards we have Asia Pacific. So if we pay attention to some other key areas right here, we have Facebook monthly active users. So with this, we are again seeing, remember that we must kind of prioritize the US and Canada, but those, you can see that it's not growing much. This is basically like the cash cow for something like Facebook, with the most of the growth happening in rest of world or Asia Pacific, as that part of the world still actually gets more internet. So that's actually one of the reasons why those markets are growing faster. It's because still a large portion of those populations don't have connection to an internet, which is to their interest in order to get them to do so, right? And actually, just so you understand, Alphabet and Meta both have initiatives to actually bring about more internet to those areas. So that pretty much covers all of this stuff with free cash flow reconciliation. We'll get to that, but free cash flow has pretty much been tapered down a bit in the most recent quarters, a lot to do with this investment that they're doing on actual cash expenses that we can actually point to, such as, for example, this R&D into the metaverse, okay? So with that being said, I want to also go into some other key parts or talk about the risks before we get into the valuation part of it. And one of the key risks with Meta is, for example, let's take a look at Apple. You guys know where this is going, some of you. Well, Apple actually released some new updates that have hampered Meta's ability to follow the user or transfer data and see what it is you're doing outside of their application, which makes it a bit difficult to see conversion rates. And that is a big problem for social media ad campaigns. And so that limits Meta's ability to be as effective as it once was. It is not impossible for them to kind of circumvent this. And Meta's actually talked about this extensively, how Apple is one of their greatest threats. So one thing that the management has talked about is how Apple and Meta are going to be at odds with each other for quite some time. And Meta will actually enter the hardware space to try to build out their own ecosystem. Whether or not they'll be successful is yet to be seen. Of course, the metaverse, I do expect for something like Apple to actually invest in that and come out with their own products. And we'll see who becomes successful, but it's tough with Apple. I'll tell you that. It is tough with Apple. Now, that doesn't mean that Meta is done for. That doesn't mean that at all. Meta still has a route ahead of it if it plays its cards well. Now, let's go back to the evaluation process. So if we go to the evaluation, I'll tell you right now, just to let everyone know, if you're curious, not much has changed. In my personal opinion, for me, the price point that I would be interested in Meta is still under the 160 mark. And so if we actually pull up Meta here, we can kind of see what the heck's going on. And for the most part, I'll tell you, I refer to my last video. It's pretty much the same. So I wouldn't be too excited in terms of adding Meta above that 160 too much, but under 160, I'd actually still be interested, and lower, right? 160 is kind of like that threshold where I think that, we can see favorable outcomes relative to the price that we're getting it at. And so at the 160 below area, we are actually seeing a price point where you can see that 8% growth rate. I refer to this video, really not much has changed. It's this video is really the part. Now you have some normalization that you probably have to account for. And so let me actually see what we can do there. And just so we're aware, it does show, again, this is kind of like a little bit of a incorrect there. So that should actually be the next forward year. So the dates are a little bit off there. But we should see projections by analysts. They are showing that they expect it to rise, cash flows to rise. And that kind of coincides with management's statements about lowering that investment into R&D. And again, that's kind of calming a little bit to investors, but the investors did not seem to like that. Of course, they are experiencing, or they are targeting, a greater return to capital for shareholders in the form of buybacks. Of course, remember, Meta is not going to be my largest holding by any stretch of the imagination. As stated from the original videos, that Meta has a target allocation that it could change, it could fluctuate in terms of how much I'm willing to allocate, but I'm pretty happy with the current allocation to it. I think it's the right exposure for me, and considering the cash position, whether or not I see better prices, I'd like to allocate to that one. So really not much has changed. So that concludes Meta's update. Thank you guys so much for watching. If you guys enjoyed this video, go ahead and feel free to leave a like. If you're not subscribed, go ahead and subscribe for more actual content similar to this. With that being said, I'll see you guys in the next one. Bye.